Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of meeting with Alasdair Macleod of Macleod Finance. How you doing today, Alasdair?
I'm fine. Thank you for having me, Darrell.
Yes, thank you for coming back on. I think that there's a lot of things happening in the world right now. There's some we're on some major stages. This seems like this is going to go down in history books. And I just want to get your perspective on the recent meeting with President Donald Trump and President Vladimir Putin in Alaska. And what was your take on that?
Yeah, it wasn't, to me, it wasn't all that surprising because, I mean, right from the outset, President Trump said he wanted to, disentangle himself from Ukraine. He saw it as a failed policy of the previous president, and in that I believe he's right. So that was his objective, and quite clearly, Putin, if you like, has a similar objective, and said that these are the terms in which we can end this ridiculous thing. Because remember, the color revolution going all the way back, and then the riots in 2014, that was all sort of very much CIA engineered. Victoria Newland, proprietor, as it were, they were, it was an American inspiration. It's a proxy war. It's as simple as that. And America is losing. And Trump realizes, there's no point in continuing. So we're out of there. His problem is dealing with the Ukrainians, but basically he'll tell Zelensky later today. This is recorded more or less, I think, when he's seeing Zelensky. He'll tell Zelensky, sorry, we're going to come to an agreement with Putin. We're going to end this. It's quite simple. You've got a choice. If you want to go along with it, then we can deal with things constructively. If you don't, then you're on your own. And as for the European circus, I mean, what a joke. I mean, they really are. They believe their own propaganda, for goodness sake. They're the warmongers in this. They really are. Anyway, they're trying to persuade the Americans not to withdraw, that the Russians are an evil bunch of bastards, and there's only one way to deal with them, and that's to beat them in the battlefield. So, but Trump isn't going to have any of that at all. And I think they'll just return home. I mean, what a wasted trip on their part. And it serves them right. It's just crazy, absolutely crazy. So I think basically that's going to be the outcome. And, high time as well, because so many lives have been lost. I think one thing which is worth making a point is that the fallback position, as it were, for the Europeans is to try and encourage a ceasefire and to have peacekeepers in there. Well, the problem with a ceasefire, as we know, is that it would merely be the opportunity for the Ukrainians, the Europeans, to rearm and then continue. So, Russia says no to that. I mean, they're winning on the battlefield. Why should they stop? Doesn't make any sense. The only way it makes sense for the Russians to stop is with a proper peace agreement, not a suspension of hostilities while they talk things out. That's not going to happen. So, I think it's really quite simple. I think that what Trump is doing is absolutely right. Is correcting earlier mistakes. And we have to bear in mind that, all this talk about Russia trying to expand into Eastern Europe and recover all the, sort of post-war territory is a load of rubbish. It really is. Always, Russia has tried to secure her own borders. And when the Americans in particular went in, tried to take control over the Ukraine, which they succeeded, and then used it, if you like, used the Ukraine as a spearhead to try and destabilize Russia. I mean, the policy has failed. You have to accept that. And so this is really, so Trump is absolutely right, I think, in his approach. We'll see whether he gets sidetracked or not, because don't forget there are if you like, deep state operatives, particularly in the intelligence services and the Department of Defense, who don't want to admit to this, really. And they see a wider picture. They see America losing her position as the world's hegemon. They are really trying to stop not just Russia, but also China, etc., etc. They're on a losing wicket. But basically, if they admit we've lost this one, then they're out of a job. So, that is something which I think President Trump will have to deal with.
Yeah, what's the cost benefit of a peace agreement? So obviously the EU and Ukraine, they feel that there's some risk or there's some fear there of what could happen, whatever their motives are in this, and so that would be determined to be the cost in their minds. But obviously the benefit would be that we could end this war. And, not lose any more lives and such, and resources and everything. And so what's kind of the cost benefit here?
Well, I mean, basically, apart from lives and all the rest of it, Russia's demands are very, very simple. And that is that Ukraine becomes a neutral state. It's as simple as that. They want the principally two oblasts on the eastern side. I mean, there are four oblasts that they've been sort of fighting for, but I think they would probably settle for two of them. An admission of Crimea, that Crimea is now Russian. And basically, a commitment in treaty for Ukraine not to become part of NATO. And for there's no need for peacekeepers. You don't need peacekeepers. If you've got peace, you don't need bloody peacekeepers. So it's actually very, very simple, Darrell. And the Russians have always wanted this, and this is what they will settle on. And I think the point about the meeting in Alaska is that this was clarified beyond any doubt by President Putin to President Trump. And it was interesting that the very brief press briefing afterwards, it seems it was led by Putin. This was,
mm-hmm.
He was, understandably, he is actually in control of the situation. And I think the meeting of minds is quite simple. Both of them want to stop this. And I think that Trump actually does understand. Because he knows the history of U.S. attempts to try and destabilize Russia, because they basically, they wanted to destabilize Russia and then they can attack China on the other side. What I think now might happen is that attempts to destabilize Iran might come back again, and also the Balkans. That's another likely area of disruption. But I mean, the beauty of Iran, as far as America is concerned, is if they can destabilize that and get political control over it, if you like, then they're knocking on the borders not only of southern Russia, but also of China. Mm. So, and Iran, if you like, is a key area of Asia, which opens up all sorts of possibilities. So that's another thing. I don't know whether that came up in the conversation between the two, but this actually could be the out as far as the deep state is concerned. Okay, we give up on Ukraine, but we've got other fish to fry.
Yeah, yeah.
But anyway, we'll see. We'll see.
What does this mean for allyship? So, I mean, when we think of like history, we think of like the allies of the U.S. Throughout history, and many of those countries in Europe have been U.S. allies. So for Trump to kind of abort mission or whatnot, what does this mean for that? Like,
well, it doesn't mean that the allies are no longer allies. I mean, you can have disagreements between allies, as it were. I mean, one of the members of NATO, for example, is Turkey. And Turkey is actually quite close to Russia. It acts as, if you like, a neutral territory if you want to fly to Moscow, you fly to Turkey first, Istanbul or whatever, and change planes. It's the only way you get there. When in the early days, immediately after Putin's special operation, I mean, literally a month or so afterwards, there were peace talks held in Istanbul between Russia and Ukraine. And they got to the point where they were signing heads of agreement. And then the CIA sent in Boris Johnson to stop it happening. You know, but I mean, the whole policy's just fallen apart. And I think that the Europeans will back down on this because they've got no option. And I mean, these are wishy-washy politicians. You know, they'll change their minds when it suits them, which will probably be the day after tomorrow.
Yeah, I've been trying to figure out, like, is this, so when we think about, I mean, obviously this started under well, I can't say it started under Biden, but I mean, what we see today.
It started a long time before that, actually.
It started a long time before that. But when Russia started with their operations, or someone may call it invasion, happened on Biden's watch, I was kind of wondering, is this like a Democrat Republican thing? Because it seems like Trump is saying, okay, this is the route he wants to go. Obviously, Biden and his party were the ones running the show, and then Obama in 2014 as well. And so are the Republicans in on this too? Like, I'm just kind of curious about, like, where's this line within U.S. politics, you know? Yeah.
Well, I think the answer is that the whole thing is actually being run by the permanent establishment in the intelligence services. So the government of the day basically has to fall in line, because it's quite simple. It's not necessarily the Secretary of State, let us say, but his close advisors will say, Secretary of State, you've got to be very careful here. Do you know that if you do X, Y, Z, the consequences are probably going to be the following? And it's very easy to put a politician off his stride by basically telling him what might happen if he pursues his favorite policy. And so, it doesn't matter which government is in power, Democrat or Republican. I mean, they face the same people running the show behind. That's the whole point about a deep state. We have exactly the same thing in this country, and it was satirized in a wonderful series. This was in the time of Margaret Thatcher, called Yes Minister, and then it became Yes Prime Minister. And the standard line from the permanent civil servant running the department was, when Jim Hacker, who was the mythological minister, said, I want to do this, then the permanent secretary would say, I think that's very brave, Prime Minister. Now, he knew that something which was described as very brave was going to go wrong. Now, either it went wrong because it wasn't properly thought out, but more likely it would go wrong because the permanent civil servants would make sure it went wrong, so that next time Jim Hacker came up with a wonderful idea, I think this is what he knew, that as soon as he was told, I think that's very brave, Prime Minister, he knew to back off. And that's the way they run things. I mean, it's true in America as well. I know that you've got a broader electoral representation insofar as the elected offices go deeper into the system than it does here. But it's still the same thing. And of course, you've got pressure groups, best of which, of course, is the Israeli pressure groups. Various Jewish organizations. They make sure that politicians are on side. And then you've got the defense industry. The defense industry, in this case, actually, the defense industry, could do actually pretty well, because instead of America buying arms, to protect, whoever from the Russians, is going to be the Europeans. I mean, we're talking about increasing our defense spending to something like 5% of GDP. What are we going to buy with it? We're going to buy American arms. Of course we are. So what, so the arms industry in America actually don't give a damn. I mean, they'll sell their arms to either President Trump or to us. They don't care.
We've got 3 of the best porphyry copper targets that I've seen in the past 25 years of exploring for porphyries. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. We've put our foot on 2 outstanding projects in central British Columbia with copper and gold and some molybdenum in there. Our Poplar South project, we're drilling there at the moment, and I think we're on the verge of a major discovery. If you want to learn more, you can find us at vizslacopper.com.
So I've been trying to make sense of the obviously Trump wants to make America great again. We have the BRICS, which could be an opposition to that, depending on how you view that, and the whole aggravation of tariffs have happened with multiple BRICS nations, Brazil. Recently, India, with in regards to buying Russian oil, Iran. I think Iran's in the BRICS, and the trade talk.
It's in the Shanghai Cooperation Organization. In fact, Iran. Yeah.
Okay, got it. Thanks for clarifying that. And then we have China.
They'll probably merge the two together. I mean, that's the story. But
okay, got it.
Doesn't matter. Yeah.
And then we have China. So he backed off the tariffs with China. He extended the delay for another 90 days. And I suspect it's because of China's chokehold on certain resources and minerals. That's kind of just my speculation. So just want to get your take there. I mean, obviously, he wants to. Is he trying to defend the dollar, or I'm trying to make sense of the motives here?
Yeah, well, he's been using tariffs as a threat, and the threat just basically doesn't work. I mean, you mentioned against India. I mean, India just turned around and said, "Well, so what?" They're not falling for it. And I mean, the whole point about trying to tariff India was to try and put pressure on Putin ahead of this meeting, which has all gone by the by. So I don't think that's going to happen now. The problem with Trump's tariffs is he changes his mind every 5 minutes, and we really don't know what the hell's going on. It's very disruptive for trade, incidentally. I mean, both ways. So, I think the way I look at the consequences of Trump's tariffs is that this is Smoot-Hawley Mark II. And let me go back. Smoot-Hawley Mark I was in 1930. It was first discussed in Congress in 1929, middle of 1929. Guess what? 1929 was the peak of the stock market. It followed the roaring 20s. In other words, we had the combination of a credit bubble and extra tariffs. I mean, they were extra because of the Ford and Macumber tariffs back in 1921. So you had these two events. And basically what happened was that the stock market lost 90% of its value, nearly 90% of its value on the index, and something like 10,000 banks went bust. That was the consequence in 1929. You've got exactly the same thing today, except it's even greater. The bubble this time is greater than anything we saw in the run-up to 1929. The tariffs are likely to have a greater effect than Smoot-Hawley for two reasons. Firstly, the US economy is more exposed to global trade than it was in 1930. And secondly, the global economy is constructed through supply chains which are extremely delicate and logistics which are extremely advanced. Now, these are very fine-tuned machines. It's rather like taking a Rolex watch and just smashing it with a sledgehammer. Something that's really working very, very well is being destroyed. The consequences of that are in addition to what happened in 1930 to 1932. So one way or the other, I just think that this is, the combination of the two is going to be a major financial and credit crisis. And I think that's something we need to get across to your viewers.
Okay, so couple points there. So you mentioned Smoot-Hawley, which happened in the late 20s or whatnot, led to the Great Depression. So when that bubble popped, America still had a lot of its industrial base and things of that nature. Then obviously Roosevelt came in and I guess helped lead us through that or whatnot. And then we went into war after that. Now we don't have that industrial base that we had back in those times, I'm assuming. And so, that bubble bursting, how bad could this be for Americans? And then also, is this going to impact the world, like the global dynamic of how the dollar's infused in a lot of different systems?
Yeah, it does. It does. And there is, if you like, one fundamental difference. Back in 1930, we were all on gold standards, or the ones that weren't were, had been in huge, great difficulties. This time, no gold standard. So there is absolutely no guarantee for the value of credit, the purchasing power of currencies against these events. So what we'll see is, quite clearly, we will see currency destruction. And, the idea that currency destruction comes from something which is progressive inflation, in other words, you print X amount of money, which will produce Y amount of inflation, and you can just draw a graph on it and all the rest of it, is completely wrong, because it all depends on the faith that people have in your currency. And the dollar is being hit pretty hard in this, but it's not just the dollar. I'm sitting here in Britain, and we have got similar problems, worse in some senses. We haven't got quite so much government debt relative to GDP, but we've got a government which is highly socialistic, will not cut any welfare costs. You've at least got a president who can back down on welfare costs and do something about it. I'm not saying that he would, but you've got, political room for maneuver there. And of course, also Europe, which is a busted flush. I mean, it really is. And what does this mean? Well, what we're seeing at the moment is we're seeing long bond yields rising, and they are about to break out on the upside. You look at any of the major bond, charts for long bonds. Look at Japan, look at the US, look at Germany as, if you like, the leading, the benchmark, if you like, for the whole of the Eurozone, and look at the UK. And they all tell the same story. These rates are about to rise, and I think they will start rising into new high ground within the month, say by the end of September. Now, this is actually really quite catastrophic, because the relationship between the long bond and equities is now more stretched than it has ever been in history. The biggest bubble in history, credit bubble in history, is about to burst. And it basically means that equities are going to go way down. You're going to see, with rising bond yields, you're going to see residential property values go way down as well, because of the cost of financing them. You're going to see big flows out of currencies by foreigners. I mean, for example, if you look at the US stock market, equities, foreign ownership of equities is roughly $15.5 trillion. And this is according to the US Treasury's tick figures. Are they going to hang around in foreign investments while the values are collapsing? Oh, hell is like, they're just going to get the hell out of it. I don't know what they'll buy. But what we are seeing is, if you like, in all the bond markets, is we're seeing steepening of yield curves. Doesn't matter what the Fed, what the Bank of Japan, what the ECB, what the Bank of England does with interest rates. Obviously, emotionally, they want to get them down from here to something far lower. But bond yields are rising. So steepening yield curves, basically, are leading to one thing, and that is a flood out of credit and into real money, corporeal money, which has no counterparty risk. And guess what? That's gold. And that's why gold is rising. And I think you'll see that gold will be rising along with long bond yields.
Mm-hmm. What does the Fed do in this situation? Is the Fed just toast in that in that situation?
Well, effectively, it is. Yes. I mean, this is an absolute nightmare for the Fed because what can they do? I mean, the sensible answer is to raise interest rates, but then you bankrupt all businesses in the private sector and probably a few banks along the way. So do they want to do that? No, they don't. I mean, people are talking about yield curve control. I mean, I'm not the only person who sort of suspects that this might be a problem. We're now getting talk about how, that the Fed might revalue, or actually it's the U.S. Treasury, revalue its gold reserves. Forget it. That actually is not on the agenda at all. I mean, it really is not. The thing that's interesting, I mean, there's so many people thinking, well, this is the easy solution, isn't it? So therefore, and then the Fed produced, one of their researchers, or a few of their researchers, produced a paper looking at what happens when other central banks, mobilize their gold reserves. And, so we all think, the Fed is going to mobilize gold reserves. And that's the solution. There's a Mar-a-Lago solution to this. I mean, we'll have to see, but I'm very skeptical about the whole thing. And I really just don't see this sort of backtracking from 54 years of virulent propaganda from the US Treasury and the Fed saying that gold is no longer part of the monetary system, even going to the point where Bernanke described it as a pet. No, I don't think it was Bernanke, actually, to be fair. Someone in America described it as a pet rock. This farce, I think, is extremely unlikely. And not only that, but it's not going to be credible for two reasons. Firstly, we all know that quite a lot of the gold that is meant to be there isn't there. We saw this also from the point of view of earmarked gold for foreign central banks. When Germany decided to repatriate some, I mean, think you initially wanted about 900 tons or something, or short 1,000 tons, whatever. And was told, well, we'll get you back 300 tons, but it's going to take 7 years. What? They obviously didn't have it. I mean, it's quite simple. So there's a lot of gold gone missing. So is the US Treasury going to stir that pot? I don't think so. That's another thing. And the other thing is that there's no point in going on to a gold standard unless you address the budget deficit and government's commitments within the economy, because the gold will run out. It's as simple as that. What will happen is that people will say, we don't want this currency. We do not believe that the dollar is a proper gold substitute. It is bound to fail. Therefore, we'll take the gold. Thank you very much. That's what happens. So I don't buy all this story about a reset. And, I think, I've met various people, I won't mention them, but, various so-called experts have sort of said, $15,000, $24,000. Not at any value. Just doesn't make any sense at all. Without a crisis happening first, and the politicians, and hopefully they suddenly restore some sensibility, without the politicians actually having the authorization from their electorates to take the necessary actions to sort things out. And that basically means government reneging on its obligations to its welfare obligations, in particular to its citizens. You can't run a gold standard with having sort of 30, 40, 50% of government actually running the economy. It does not work. Simple. Yeah.
What does this mean for military spending? So obviously that's a trend that's on a trend upwards, and a lot of the global conflict happening right now, seems like military defense spending is going to continue to increase around the world. Even I wonder, is this even the case, even if we have a situation like you just described?
It's an interesting point you raise. I mean, not so much in America. who I think are farming out quite a lot of this spending on the Europeans through NATO. I mean, Trump has insisted that other members of the NATO actually step up to the plate and spend a lot more of their GDP on arms. And at the same time, he says, we're very happy to sell you the arms. So actually what's happening is that the spending is being transferred from the US to the EU. That's the situation. This is particularly difficult for EU nations. And for us, Germany, for example, is having to abandon its fairly conservative debt policies to accommodate this. In the UK, we already have if you like, a crisis, which is it's a funding crisis emerging. And yet, since the last budget, Keir Starmer, our Prime Minister, has said that we're committing to a further 5% spending of our GDP by, I think, 2030 on defence. So how are we going to accommodate this? I think the answer is with extreme difficulty. I just don't see it really happening. But you can always provoke a war somewhere. And this is why I think Iran might come into the equation, maybe even the Balkans. So,
yeah,
it's not over until the fat lady sings, as Fat Waller said. I think who's Fat Waller? Yes, that wonderful jazz man back from the 30s.
So do you see? So when this comes collapsing down, is this more like a deflationary bust? Is it going to lead to inflation? Let's say the Fed comes printing, like crazy, stagflation. What kind of economic situation do you see coming out of this?
Well, what I see, Darrell, is more a collapse of the purchasing power of currencies. I mean, to call it inflation, I think, is to misunderstand actually what's happening. It's the security of credit, if you like, the risk of holding credit, which is just going to go through the roof. And, one way or the other, I mean, what we're already seeing, and I'm actually putting out a note in the next day or two on bond yields, we're beginning to see long bond yields actually break out on the upside again. Now, just imagine you're going to have US Treasury long bond yields in excess of 8, 9, maybe even 10%. Imagine what that does to the dollar. I mean, basically, there's about 40 trillion of foreign ownership of dollars and in underlying financial assets. What's going to happen to that? They're going to get the hell out of it. Other currencies have got the same problem. I mean, we've got a huge problem in the UK. I understand from official comments that, read it from the Bank of England, that there's a very heavy ownership of sterling and all the way along the yield curve by hedge funds, global hedge funds. And I mean, they're just going to get the hell out of it. They really are. Because they're leveraged. Their leverage plays on basically interest differentials. You can sort of go short of, let's say, Japanese or euro instruments, go long of sterling, and you got a nice little yield pickup. Well, that's fine until everything is wiped out by currency, by the currency collapsing. This is. I mean, there are going to be so many cross currents, but basically, when things start really going wrong, if you've got foreign investment, you just get the hell out of the foreign investment. So that's the place to look for where the greatest collapse is likely to come from. I mean, looking at the Japanese situation, they've got very little in the way of foreign investment, but that's about that, if you like, is going to be the only thing that saves them. But having said that, it looks to me like their long bond is going to yield. I mean, at the moment it yields, I think, from memory, something like 3.3%. It's quite a steep yield curve. I mean, all the way from 1% or whatever it is at the front end. That I can see. I can see going 4 or 5% quite easily. And we say this is a huge, great crisis. But the one thing it won't do is produce massive foreign selling of the yen. Why? Because the foreigners basically don't have it. If anything, they're short of the yen because they're using it as a carry trade to, pick up interest rate differentials or bond yield differentials. Sell yen for dollars and invest the dollars in US in US T-bills. That's basically the sort of thing that's been going on. So I think as we see bond yields breaking up into new high ground, particularly at the long end, I think that the real problem is going to be in those currencies which are over-owned. And they are particularly the US dollar and sterling. But all of them are going to go down against gold because in Roman law, and this is still true in all our common law, you've got two forms of circulating medium. One is real money, which is called corporeal, which has no counterparty risk, and you can actually hold in your hand. And that is gold. The other is credit, which is a promise to pay in gold, which so far everybody is actually, all the governments are reneged on this, but in common law, it's still there. And if you don't tie the value of your credit to gold, then in a credit crisis, it's the credit that loses the value. We're not talking about gold going up. We could have gold at $24,000, but it would be the same value, if you like, in terms of commodities, other commodities and so on and so forth, as it is today. What will have happened is that the dollar will have gone down the drain. That's what we're going to see. Mm-hmm. And it's becoming inevitable, by the way. In fact, I would say it is inevitable. And I think it's getting very, very close.
Yeah. Thanks for sharing that. One question that I always ask myself is like, how much gold do I need? In this type of scenario that you're mentioning, how much gold would I need in that situation? And so I've been trying to kind of figure that out. Like, how many ounces do I need? And such.
So does everybody else figure it out. I mean, basically, the answer is anything you have in credit, you're going to lose.
Yeah.
So that answers your question, really. I mean, silver is also, incidentally, that rates as a monetary metal. It's not being priced as a monetary metal. It is subsidiary to gold, certainly, because when it is, you won't get anyone going onto a silver standard. I mean, that's not going to happen. But silver always is, if you like, it's the poor man's gold. It's the one which, it's small change, if you like. And if you go back to the 19th century, when we fixed the gold standard, silver coin was legal tender for up to 40 shillings, which was £2. Now, to give you an idea, £2 was 2 sovereigns, gold sovereigns. 2 gold sovereigns today are £1,200, or roughly $1,600. So that, if you like, is the sort of level, if you like, of legal tender for silver. That's the sort of scale of it, if you as it were. So it'll always be a number 2. But, I mean, on a gold to silver ratio, currently, 87, 88 or something like that, it's way undervalued. And not only that, but I did some work on the price of base metals measured in gold, and they are also way undervalued. In other words, gold, if you like, is anticipating a lot of the problems we've been talking about in this interview, which are yet to be reflected, if you like, in any sort of move out of credit and into key commodities, such as base metals, copper, and so on and so forth. Copper did have a big spike, obviously, when Trump said it was, there were going to be 50% tariffs on copper, and then backed off on cathodes. So, everybody heaved a sigh of relief and the price came back down again. But all these metals are basically in bull markets. And the other thing is, if you look at soft commodities, particularly foods, agricultural produce and things like that, they have been increasing in value as well. They are in a bull market. So we're going to see commodity prices rising. So, the one thing that governments look at, as it were, and all the sort of macro statisticians look at is, what's happening to the rate of inflation. And they will see these prices rising. And they'll probably start rising a lot more quickly than anybody thinks.
Mm-hmm.
So I go back again, what value the dollar if you see long bond yields in excess of 9 or 10%?
Yeah, for sure. What do you make of this stablecoin legislation? It seems like the Trump administration is trying to get more buyers of the U.S. debt, which helps finance the deficits and spending and such. What do you think? What are your thoughts there?
I think that could be part of it. But the problem with pursuing that line of thought is that the level of stable coins in issue really depends on the demand, if you like, for Bitcoin, Ethereum, and the other unstable coins, as it were, which you might buy. That's what would drive the quantity. So, in other words, if there's no real demand for stable coins, then it's not going to provide additional finance for government T-bills, really, because it would be angled at T-bills. I think a far more rational explanation is that the regulators have taken the view that, look, it is out there. This is a problem. We're getting big banks leaning on us saying, why can't we regulate these things? And so we've got to grasp the nettle and regulate stablecoins. So I think that's what they're doing. They're trying to reduce, if you like, overall systemic risk from this thing, and to force stablecoins not to, say, have partial backing in the currency which they represent, but complete secure backing. The last thing they want is another area of potential crisis, if you like, which could well happen if stable coins, let's say, went out along the yield curve to get, it's not, you don't get a better yield really going along the yield curve at the moment, but that could be the situation. As we found with regional banks back in 2023, there is risk, if you like, in backing your deposits, which is what a stable coin effectively becomes, with risky debt. So I think it's really to control that. And basically, I think what the Treasury wants to see is that stable coins are entirely backed by short-term T-bills. It's rather like, if you like, rather like a money fund in that sense. Mm-hmm. So I think that's the answer. It's a regulatory thing which they want to get under control. I think rather than looking at it as a serious additional source of finance for government spending.
Got it. And do you have any thoughts on, I don't know if you've been following this, but the stablecoin issuer Tether has been buying tons of gold, and they even made a coin that you could redeem an ounce of gold from. And they're also like one of the biggest buyers of U.S. debt right now. And so do you have any view there? And they've actually taken some position in some of the gold mining royalty companies. And so I'm kind of wondering, like, okay, are they seeing something, or are they trying to pivot?
Well,
or what?
Yeah, I mean, I've heard about it, but I must admit I haven't looked at it. But my response to this is that it's rather like buying an ETF, isn't it? You're going to have counterparty risk. And do we trust the issuer? The issuers of Tether. Far better to actually physically own the gold. I mean, it's as simple as that. Store it with a proper custodian, and there are a few around. Because you obviously don't want to store it all at home, assuming that you got more than a few dollars to rub together. So yeah, I would see any move like that. I would not be interested in it at all, for the very simple reason that I'm not getting rid of myself of counterparty risk at a time when we face a complete currency collapse. And you see, the other thing is that, you get these things regulated and all the rest of it. The government and the regulator will take things away from you if it's in the bank, if it's in a regulated institution, because they merely, at a stroke of the pen, change the rules, instruct the banks, all regulated entities, to hand in stuff, if you like. This is what happened, as I understand it, with the executive order in late 1933, when Roosevelt, he didn't confiscate gold, but he enforced the exchange of gold for non-exchangeable dollars.
Yeah.
Did you, as an American citizen, say, "Oh, okay, I've got some gold, I better hand them in for dollars"? No, you didn't. If you had it in the bank, however, the bank handed it over. You were stuck.
Yeah,
Get out of the system.
that mentions. That's a really important point with the counterparty risk, and especially if you're facing a collapse. A collapse of the dollar.
Let's call it a crisis. Yeah. A real crisis.
Yeah. If we're facing a crisis, that counterparty risk of, are the issuers of the ETFs, are they going to give people their gold? Is Tether going to give people their gold, or the banks going to give people their gold in this type of situation?
It's worse than that. It's worse than that because, particularly with ETFs, you don't possess the underlying assets. The ETF issuer company, which is the ETF, possesses them. But you don't even possess, if you like, that relationship. You're not a creditor of it. No. The immediate creditor, always in this certificateless environment, is Euroclear, or one of those big organizations which basically acts as the electronic issuer, if it were, to the public. So what you have is the ETF company has an obligation to Euroclear, and then Euroclear has an obligation to you. What this means is that in a crisis, it can take the value of the ETF and deploy it as collateral without you being involved. It's still got the obligation to pay you. It's saying, no, I'm not going to pay you. No, I'm going to use this collateral. Yes, okay, we've still got this commitment to you, fine. But it can use it to try and save the system, as it were. This is very important because, people like Euroclear, DTC, whatever. They're all intermediaries. The same with COMEX. They're all intermediaries. And the idea basically is that you can go and deal without having to worry about counterparty risk, so that you get your securities, you get your futures, whatever it might be, which is absolutely fine. You don't worry about this. But when you get a real systemic problem, then the ability of the regulated entity, whether it's COMEX, Futures Exchange, these exchanges, if you like, or outfits like Euroclear, DTC, whatever, in a real crisis, they're going to need, they don't have the capital. They're just basically sitting there saying, we're an intermediary between debtor and creditor. That's what it boils down to. But they have no capital of their own in this at all. So if there are counterparty failures, they're taking it on the chin. So what happens then? Well, the answer basically is that they turn around to the banks, which are all counterparty in this mess, and offer whatever collateral they have on their books, which is your stock, by the way, to secure the position.
Yeah.
Good luck with that. This is why I say get the hell out of credit.
You actually mentioned.
Sorry, go on.
I was just gonna say, you actually mentioned a really good point, because this has been like I've looked at some of the gold trusts and things of that nature, and I've read the fine print, and you have to have a huge amount of shares or invested, like almost like a hedge fund, to even redeem the gold. And so for me, it's like, okay, well, I might as well have the physical, like.
But Darrell, it's not just that. I mean, basically, you have to be what's called an authorized participant. In other words, you are on a list of maybe half a dozen banks for GLD who will accept you redeeming shares, which incidentally you probably borrowed from an existing shareholder. You can go short. Okay, you go short. You borrow the shares to cover your short position, and then deliver them into the custodian or the trustee or whatever of GLD, and you'll get 50,000 ounces back, or whatever the amount is that you're putting in. There's a minimum, obviously, on it, and it's in multiples of, say, 50,000 ounces. Which you can then use to cover your own short position in the market. So where does that leave everybody? There's an Australian expression which is rather agricultural. It comes from farming. You're like a piglet sucking on the hind tit. That's the Australian expression. You're last in line. And you don't want to be in that position. So that is my fundamental objection to ETFs in a crisis. I mean, if you're just investing, if these are normal investing times, then fine. ETFs are a bloody good idea. I mean, they've got a fairly high expense ratio in many cases, but fine. You want to capture the price movement of something, whether it's a commodity or whether it's an index or something like that. Absolutely fine in normal times, but when things cut up rough, you don't want to be in there.
Yeah, for sure. So you mentioned the getting out of the system. Anything that's credit based and such, and it has me thinking about retirement. And in this scenario, our retirement dreams, do they just go bust? Because like many people are putting their life savings in there, or their employer may, force them to allocate a certain percentage to their retirement fund, and which is tied to the stock market and such. And so, what happens? I mean, I assume what happens, but how do you navigate that? That's pretty.
Well, it's virtually impossible for most people. I mean, for a start, you probably don't manage your own pension fund. You may have a 401k or whatever it is in America, which you can manage. And I'm not sure that every 401k provider, but I'm not in favor of the system, actually authorizes the purchase of gold and silver. In other words, real money. Because they're not authorized investments. You turn around. I mean, for a provider, really what you're looking at is authorized investments. And authorized investments are bonds, equities, futures, forwards, whatever. But they're not physical commodities. So you may have a bit of a problem there. I think that the vast majority of people who, as you rightly say, have saved into company pension schemes and all the rest of it, are just going to lose a lot. That's going to hit the elderly very hard. It really is. I mean, it's going to be terrible.
Yeah. Okay. And then so I'm just trying to reconcile this view of the dollar. Obviously, crisis or collapse, or however we want to frame that. Typically, the demand for dollars in a crash typically goes up, where you have people needing dollars. I mean, you can go in and buy equities very cheap, or someone may be willing to sell their house cheaper or whatnot. So the demand for dollars, how do you envision that in this crisis?
Yeah, I mean, I think it's a very sensible question because, the flows, if you like, not going to be even. I mean, the idea that just, get out of equities and go straight into gold or whatever isn't necessarily a straightforward relationship. We saw, for example, back in 2008, 2009, when the crisis hit, gold fell from having been just over $1,000, fell down to, I think, 670. It then went on to, $1,200 or something. But you do have this effect. What it boils down to is that if people have, if they're long off something which has gone up and other things are going down, inevitably what they do is they hang on to the stuff that's gone down and realize, cover the losses, if you like, out of the stuff that's gone up. So, you would expect to see selling of gold under those circumstances to cover losses in equity markets. Now, the point about it is that today, gold ownership is less than 0.5% of all investment portfolios. Less than 0.5%. Now, I think in a crash in the equity market, it would be seen as an opportunity by the shorts, who are very worried, I think, in the current situation, to close their positions. So they will mark things down, try and scare people out of futures, out of forward deals, whatever. That, I think, is inevitable. So the idea that gold just goes shooting up and so on and so forth isn't quite true. It's going to be volatile, let's put it that way. But any dip in there, basically you should be in a position to buy it. The best thing is to get out of credit early and just ride through the whole thing. Because if you try and trade it, unless you're very clever, unless you're in the sort of 10% who actually know what they're doing and have that sort of the devil's luck, you're going to lose it. You're going to lose money. So I think that's the way I look at it, Darrell. I think it's, I think to try and sort of trade that one would be silly. But I will admit that crashes in equities, crashes in bonds are likely to produce, conceptually anyway, some profit taking in things where you have profits. And of course, you account in dollars and you've made profits in gold. So I can see the argument, but the reality of it is not as great as the argument would suggest.
Mm-hmm. Yeah, thank you. Thank you for sharing that. And so on that note, appreciate you coming on the show and everything and sharing that outlook with us. Where can people connect with you and find more about what you're up to?
Well, I run a Substack, MacleodFinance.com, or Alasdairmacleod.substack.com. Either will get to me. I'm really, my mission, if you like, is to make people aware of the dangers of really the end of this fiat currency era. That's what we're running into. And it's going to be something which is going to be extremely difficult for everyone, but particularly ordinary people who aren't really versed in money, credit, and what is actually happening to their wealth. I mean, however high or low their wealth is, it's going to affect everybody. So you have to know what the hell's going on. My mission is to try and educate. So you'll find me there, MacleodFinance.com or Alasdairmacleod.substack.com.
Okay. With that being said, you all be sure to go check out Alasdair Macleod on MacleodFinance.com or the Substack that was just mentioned. Be sure to hit the subscribe button and the like for this video to get out to other people who may need to hear this information. Share the video if you like as well. Thank you for watching, and I appreciate you all.